Dear students, Sai Ram to you all. Welcome to this session under macroeconomics. Let us discuss today the national income accounting. Under this section, the objectives today we are going to discuss is the functioning of a simple economy, how a simple economy functions. Then also we are going to see some basic concepts, that is the concepts between what is the difference or what are relevant importance with the final goods and intermediate goods, which is important for national accounting. And also we are going to see the consumption goods and capital goods, what are the differences and how to consider while measuring national income. And also we are going to see the stock and flow concepts, that also very much relevant in measuring national income. And before going into detail into the national income part, we have to see what are the basic sectors of economy in India. These are the basic economic sectors very prominent in India, which contributes to the GDP or national income of the nation. First is primary sector. What do you mean by primary sector? Primary sector is the sector which involves all the activities which utilize the natural resources for the production process. For instance, we can take agricultural sector. It's a major sector in India, and which is the very huge employer of the human resources of India. Therefore, this agricultural sector uses natural resources, mainly land, the fertile land, water resources, labor resources. They utilize all these resources and they produce output. You know, the paddy production and the wheat production, and we have studied under microeconomics what is production. The transformation of inputs into output is the production process. Therefore, here agricultural sector utilize all the natural resources like land, labor, water resources, and they convert into paddy or wheat or other fruits and vegetables, which are very important to the nation. And agricultural sector, you can see it is as per the statistics of Ministry of Statistics and Implementation to 2018 and 19, it contributes almost 16% to the GDP of the Indian economy. And the second sector which contributes the Indian economy is the manufacturing sector. We can say manufacturing sector or we can say industrial sector. That means what is this sector does? This sector produce the goods. It's a production process take place under this sector. It producing the goods, maybe agro processing industries or automobile industries, mobile industries, any industry, cement industry, plastic industry, textile industry, so many industries comes under. This is the backbone of the country and it determines the development of India, and this is the manufacturing sector and the construction industries all come under this sector. This is called secondary sector or manufacturing sector, or we can say it is as industrial sector. It contributes as per 2018-19 statistics almost around 30% we can say. And this tertiary sector, the tertiary sector is the third sector. It is called services sector. It contributes much towards the GDP of a nation, national income, that is 54.4% according to 2018 statistics, 19 statistics. Here the what service sector, it actually doesn't produce anything, but it's a supportive sector for both the other sectors, primary sector as well as manufacturing sector, because this sector gives more importance for the skilled personnel and educated personnel. More importance is given nowadays, and this sector supports me in what? For example, agricultural sector can produce products and it has to be, those products have to be taken to other states. For example, trucks, lorries, transport services, communication services, health services, educational services, all other services, you know, every other services comes under the tertiary sector, which supports both the industrial sector as well as the primary sector. I hope you understand. These are the three basic economic sectors of India, and it contributes 54.4% as per the statistics of 2018-19. This is primary sector employs, according to 2020 statistics, more than 40% of the population of India is engaged in agriculture. I hope you understood these basic sectors which contributes to economy, later you will study expansive sectors separately under degree courses. And now we will see some of the major central questions under this economics when we calculate national income. First one, what generates economic wealth of a nation? For economic wealth mean indirectly it is national income and other wealth it is included. How we generate, a nation generate economic wealth, and also what makes a country rich or poor. Here we are going to compare other nations and we are going to find out the answer for this question. Here, economic wealth or well-being of a country doesn't depend merely the possession of the natural resources, because we can say the Latin America and other countries, they have African countries, they have full of natural resources, they are very plenty in natural resources, but they seem to be very poor countries. The reason is, and how these resources, because you can have the natural resources, rich resources, but you should put all the resources under production process and convert them into output, and you have to sell them in the market which is needed for to fulfill the human wants or human needs. Then only you can generate income. Just keeping natural resources without taking into production process or transforming these natural resources into the goods and services which wanted by the human resource, human to fulfill the human wants, is not going to help the nation to grow in wealthy or to become a wealthy nation. Therefore, how these resources are used in generating a flow of production. Flow of production means production activities. What is production? The transformation of input into output we have seen in microeconomics. Therefore, the income and wealth are generated from the production process. All the resources should be under, for example, I can say we have a very fertile land with a fertile soil, we have lot of water resources, still we are not producing more and more wheat production, more and more rice production. How can we sell it in the market? When we produce, what do? We sell in the market. When we sell in the market, what we derive? We get the national income. That national income contributes the GDP of the nation. Therefore, unless you put the resources under production process, it's no use even having a lot of plenty of resources in a nation. I hope you understood. And then the next section we are going to see, for example, this is what I explained to you. All the natural wealth in the rich Africa. Africa is rich in resources, natural resources, and forest, fertile lands, minerals, and all these water resources are rich. And Latin America also. But these countries still considered to be poor countries. The reason is they don't put this, they actually efficiently involve all the natural resources into production process, and they don't produce much, they don't use the resources efficiently. And therefore, whereas when we say prosperous countries like Australia, UK, USA, what is happening? They are very scarce in natural resources, but they are considered to be rich nations, but they are poor in natural wealth, but they generate income. How? You all know, under British rule in India, what they did? They transported all the natural resources, jute, silk and cotton, everything from India to England. And what they did? They put all these raw materials into production process using their technology, and they converted into final products and final output and commodities, and then again they transported back to India to market their outputs. Thereby, and India and as well as other countries, they generated so much of income. The reason is the flow of production was in their country. Raw materials were taken or exploited from these countries to England. That is how they became a rich country. I hope you understood. Resource has to be transformed through production process to generate wealth. That is what he studied. What is a production under microeconomics? Production is nothing but transformation of input into output. What are the input? Natural resources are the input. They are the raw materials. I hope you understood. And now, what is flow of production process? When it happens? It happens when you continue to use all the natural resources into production activities. That means, what do you produce? You produce goods and services out of all these natural resources. Maybe the production may be involved a small firm or big enterprises or giant industries. Anyway, but after all, you are producing the products. Therefore, many industries in India, I have already told you all, iron, steel industry, there are different companies. Textile industries, there are different enterprises produce textiles. Sugar industries, cement industries, variety of industries, enterprises involved in cement production. Paper industry, petrochemical, automobile industries, there are different automobile companies in India. And information technology, IT, and banking and insurance, all these things are the goods and services the producers produced using the natural resources. For instance, in this institution, we are creating natural resources. What natural resources we are creating? Human resources. We are involved in human capital formation by teaching you all, by giving the knowledge and the skill. We promote your capacity to work in any sector. Therefore, we are producing human capital formation or human resources in this institution as professional of educational institutes. And now, what happens this commodity? We have produced now, using the natural resources under the flow of production, we produced different goods. What we are going to do now? After production, we have studied in the first chapter under macroeconomics, capitalist economy. We know capitalist economy, the enterprise or the firm owner owns all the natural resources put under production process, and what he does then, and he continue to produce output. And what is the purpose of production? Sell in the market. There is a link between the first chapter, the working of capitalist economy, and this chapter where the functioning of economy, both are interlinked together. Same concepts we are discussing as it is in the capitalist economy here also. What we do after production, he or she sell the production. But after selling the production, what she gets? She gets the income. Therefore, goods and services, very smallest article to the biggest article, it is sold in the market, whether maybe goods or services. For example, pins to buttons, largest ones, aeroplanes, automobiles, giant machineries, and the other saleable services like the doctors, professional teachers, all the consultancies, all are sold and income is earned. I hope understood how is income is generated. I hope you are clear. And now we are going to see a production process of cotton. And before that, who will buy? We are going to sell it in the market, our output. Who is going to buy? This is the question you have to ask in every section. Then we will be clear of the concept. We have produced, we utilized natural resources, converted and transformed into output. After producing the output, we are selling in the market. Therefore, by selling, who is going to buy our products? Theory of consumer behavior. Under microeconomics, we have studied consumers are there in the nation. They will give market for our products produced by the producers. Therefore, they will sell. They will buy all the goods as per their want. Therefore, they may be consumers, may be individual, or they may be enterprises or big industries. Based on their need, they will buy capital goods or consumption goods anyway. And the goods and services, why they buy? Questions, every question you have to ask, then only you will understand the concept. Why they buy? They may buy for the ultimate use of the ultimate consumers, or they may buy to use for further production. For example, aluminium sheet or iron steel sheet. They buy these sheets for the production of automobiles as a body of the car or body of the vehicle using steels. That time these goods are bought as a raw materials for further production process. Therefore, we will study under final intermediate goods. And now we are going to see a production process in case of cotton. This is a natural resource cotton. It is sold to the spinning mill. Then what happens under the spinning mill? The production process, transformation takes place. That is, cotton is transformed into yarn. Then yarn is sold to textile mill. And what textile mill involves? It converts the yarn into cloth. What cloth again? It transforms to a dressmaker. He makes the dresses, a woman dress or gents dress they make. After that, what they do? They sell it in the market as a final product. That is how income is earned using the natural resources. Therefore, production processes are involved. Therefore, when the production processes are involved, the products are ready to be sold. When you sell it in the market, you get the income. I hope you understood the income generating process through natural resources. Now, why we call some good? Now we have finished the functioning of economy, a basic function of an economy and how they generate income. Now we are going to study some concepts which are very important in case of national income measuring, that is final goods and intermediate goods, we are going to see now. That is the second part of the topic today. The final goods, why we call it final goods? Once it is sold, some particular goods, it comes out of active economic flow. That is the last economic flow mean whatever you are selling, you are getting money. But final good mean once you sell it, you are not going to generate any more income out of that good. That is called final good. It comes out of economic activity. Therefore, final goods, they do not undergo any further transformation in economic process. Economic process means you are getting money further selling again and again. For example, tea leaves. A mother of the household buy tea leaves. That is the final consumption by an ultimate consumer called your mother. She prepares teas and gives to the children, no, not earning. That is the last stage of that good tea leaves. But tea leaves bought by a restaurant owner is not a final good, because he is going to involve the tea leaves again and again for the economic process. Economic process means involved with the money. What is he convert the tea leaves into tea and sell it to the customers in the restaurants. Therefore, he earns more money again and again. Therefore, it is not a final end for that product. But therefore, you have to differentiate between final goods and the individual goods. Final goods in the sense, it doesn't create any more further economic process, mean no money earning. But intermediate goods mean that purchaser again can add value added and can sell it and earn more for the money by tea leaves bought by restaurant owner. He will convert tea leaves into milk and sugar add, and again will each cup of tea with high price in a restaurant. Therefore, final good, they do not undergo transformation in economic process, mean then we will call it as final good. And you can say, however, the transformation by the action of ultimate purchase, therefore tea leaves we are not going to eat like that. We will put salt, hot water and make it tea. It is a transformation takes place in the form of the product. That is, tea leaves become a liquid with the hot water and sugar and ultimately consumed by the people in the house. But that is a cooking process. Cooking process is not taken or considered as economic activity. That you understand, okay? The transformation takes place in the cooking process. Therefore, cooking is not an economic activity. But in the restaurant he sells to other people, it is an economic activity. I think it makes you clear. And final goods we can divide into two goods, consumption goods as well as capital goods. Consumption and capital goods. And again the consumption goods are divided into two parts, that is non-durable and durable. You know, consumption goods, non-durable mean all the foods and fruits, all are called as non-durable goods. And TV sets, cars, all the vehicles and all are called as, and other capital goods, implements and the big moving machines, earthing machines and mining machines, all are called as capital goods. Here the durable mean, consumer durable mean TV sets, refrigerator and all these things. We will discuss later in detail, and these are the distribution of final goods, consumption and capital goods. You have to understand. Again, consumption goods you can say, in some other books they will say consumer goods. Consumer goods or consumption goods, both are same. Again they have depend on the durability. Again it is categorized as non-durable and the durable. I hope you understood these differences. And this is the consumption goods. You can see as it is in these consumer goods, some food items are there, fruits and vegetables and all the food items are there. They are also consumer goods, but they are non-durable. And there is a washing machine and a refrigerator and all these bicycle are there. They are all come under durable consumer goods. Therefore, goods, food and clothing. This is an example for non-durable consumer goods or consumption goods. And services like recreation are consumed when purchased by the ultimate consumers are called consumption goods. But recreation, what do you mean by recreation? We are going for a waterfall, a scenery, and we enjoy that recreation, that waterfall. That is called recreation. It gives us happiness when we watch it and observe it. That is called recreation. It is ultimately consumed by the particular consumer immediately. These are called consumption goods. And then capital goods. What are the capital goods? The buildings of our schools, our colleges, university buildings, all are called buildings under capital goods. machineries, whatever the printing machines, photocopier machine, all the machines what we are used, they are all capital goods. Equipments, vehicles and tools, they are all called capital goods where they are very durable. We can use it again and again for a long time. These are the other goods that durable in character and which are used in production process. You know, they use the buildings of the university or the schools for the educating the students, the human resource development. Therefore, we are giving services using the buildings, and all the machineries, photocopier machineries, all the machineries are help in that process, and they are supportive instruments. And these are the capital goods. Here you can see this one, you know, big machineries, moving machine with generators and all the big cranes and all these things in the automobile industry or in any other industry. You know, these are the example for capital goods. And capital goods make the production of other commodities easy. It makes feasible to produce other goods without a crane or without a earth moving big heavy machineries. We can't do mining and mining industries, mining work and all. Therefore, they support production of other commodities feasible, but they themselves get not transformed. Like a food products, we transformed and we eat up and finish it. But these capital goods, they are not get transformed themselves. They still as it is, but they support the production of other commodities and other services. Therefore, capital goods have these special features. They support the production of other commodities without themselves getting transformed. That is called capital goods. I hope you understand. You can see the buildings, batch after batch, we will produce so many students, but still building will be there without any transformation. Only building supports for the educational services. I hope you understood. And capital goods are also final goods, yet they are not final goods to be ultimately consumed. Nobody can consume it, but it will be there. But there will be wear and tear, but no ultimate consumption, but still they support without getting transformed. And capital goods, other features is enable the production process for the continuous cycle of production. That is mean 2018 batch of students, 16 batch, 15 batch, 14 batch, so many batches are going out of our institution using our buildings in the educational institution, but buildings remain the same, but there are some damages, wear and tear. And these are the goods, and they gradually undergo wear and tear. You know, we have to, you know, maintain the buildings, we have to give whitewash, and we have to paint the buildings, we have to change the fans, and we have to change the desk or table which are broken by the students. These are things called wear and tear. I hope you understood. When we utilize capital goods for over a long period, it may get damaged. It may get lose the initial beauty. Therefore, we have to maintain it and continue to use it. That is called wear and tear. I hope you understood. And thus, capital goods are repaired or gradually replaced over time. It is completely damaged, means we have to go for a new car. A car can be utilized for 20 years. After 20 years, we have to repair and use again and again. After 20 years or 15 years, we have to go for a new car replacement, completely replacement. I hope you all understood. And consumer durables. Under consumption goods, I told you, there are durable goods and non-durable. Non-durable is food, milk, vegetables, meat, all these things we can use maximum 2 days, 3 days. After that, it will get, you know, it is getting spoiled. Therefore, and consumer durables mean you can see television sets, automobiles, our home computers, we can use it for a longer time. That is what it is called, capital goods. Then the consumer durables. Even the consumer durables have a common character with the capital goods. What is the common character with the capital goods? What are capital goods? Buildings and machineries, implement and tool. Capital goods can be used for a longer period. Same way, we can also use these consumer durables. What are the consumer durables? Cars and television sets, automobiles and home computer. We can use them after repairing and by maintaining carefully, we can use. Therefore, the consumer durable is same as capital goods because they are durable. They have all actively long time, relatively long time as compared to the food and clothing which have non-durable character. And now these are the durable, consumer durables, cars, and you can see washing machines and refrigerators and computers, TV sets, etc. in this diagram. I hope you understood. And consumer durables also undergo wear and tear. TV we repair, computer we repair, washing machine we repair. Why we repair? Because they wear and tear and burn out, and sometimes we need replacements of parts. Example, machines for the cars and all, they also need to be preserved and maintained to utilize for long term. That is what these goods are called, consumer durables. This question used to be asked in the exam. Explain consumer durables. I hope you understood. And they also ask, explain the differences between final goods and intermediate goods. Now we are going to see intermediate goods. What are intermediate goods? This question always used to be asked in the point of examination. Differentiate between intermediate goods and final goods. 4 sentences, 2 marks. Here you can see intermediate goods are the goods which are mostly used as raw material or inputs for further production of other goods. For example, I told the steel seats used by the automobile industry for the production of cars, automobiles, that the body of the car made out of steel seats, therefore, and aluminium for the production of vessels. Therefore, example, steel seats used for making automobiles, and also the copper used making utensils. These are the intermediate goods, are not final goods. Why? Intermediate goods are not final goods because intermediate goods are going through economic processes, because they buy steel seats, they convert into cars and they sell it in the market. Therefore, it goes through the economic process. Therefore, intermediate goods are not final goods. I hope you understood. The next one, other example for intermediate goods, tea leaves used by household by your mother is a final good. No economic transaction after buying tea leaves. But the tea leaves by the restaurant owner is not a final good, because he is going to make these tea leaves to sell it for the other customers. Therefore, it is there, continuation of economic flow is there. Money is earned again and again. Therefore, it is tea leaves bought by a restaurant is not a final good. It is called as intermediate good. I hope you understood the difference between final good and the intermediate good. Cloth purchased by a household for a daily use is a final good. But cloth acquired by a dressmaker is not a final good. It's an intermediate. He is going to convert this cloth into different dresses and going to sell it in the market and earn money. There is continuous economic flow is there. Therefore, it's not a final good. It is considered as intermediate good. These are the major differences between final good and intermediate good. I hope you understood. And national income includes value of final goods but intermediate goods. That you should understand. While calculating national income, you should be very clear. Only consider the final goods, not intermediate goods, because the value of intermediate goods is already included in the final good. Therefore, after including the one commodity into final good, you shouldn't again going to take the value of intermediate good. It will amount to double counting, and it's an error in the case of national income accounting. Therefore, for the calculation of national income, only final goods are taken into consideration, not intermediate goods. It should be very clear, because the value of intermediate goods already included under the value of final goods, and then value of intermediate goods is already included in the final good. Therefore, when we include separately final goods separately, intermediate goods separately, what we do, we exaggerate the value of the national income. Therefore, it is wrong. It is called double counting error. And now the last portion, our objective today for the lesson is the concepts of stock and flow. This is the last section we are going to study now. Why concept of stock and flow is considered to be important in case of national income accounting? Because if we say average salary of a person 10,000, no one gets a very sensible understanding. Why? We don't know that 10,000 per day is earned, or 10,000 per week is earned, or 10,000 per month is earned, or 10,000 per year is earned. The time period is not mentioned here. Therefore, it is not a it's a meaningless statement when we say just my salary is 10,000, that's all. Who will understand what is my salary per month or per year or per day? Therefore, without time factor, if we give a statement like this 10,000, we can't use it for the calculation of national income accounting. Therefore, yearly or monthly or daily income time period should be included when we say a statement about income. Therefore, this incomplete statement when they are without mentioning the particular time period, Therefore, based on this type information, like without time period, we cannot use for this calculation of national income accurately. Therefore, these concepts of flow and stock is very important in the national income accounting. We can see here, thus income or output of profit, all these variables or concepts only will be sensible or make sense for anybody only when we describe the particular time period this is specified. Profit earned for the year, or profit earned for the month, or profit earned for the day. Without that, if you mention, or production, the 10,000 tons per year, or 10,000 tons per 6 months, we have to mention, otherwise it doesn't make any sense. And therefore, these are called flows because they are occur in a period. Therefore, output produced per year is a flow because it's specified by a year. Therefore, the amount of variables, this may be income or output of profit, which accompanied with the time period is called flows because it happens the output earned for the year, profit earned for the year, in income earned for the year or month is a time specific period, it goes flows. Understand why flows concept is important, because it associated with the time. It gives an exact sensible meaning to calculate the national income. And since a lot of accounting is done annually, therefore what we say in an economy, we say annual income, annual profit, annual output. Here annual is time period mentioned, therefore it is called a flow concept. And then there are many variables like income is a variable, savings it's very savings per day is vary, savings per month is vary, savings per year is vary, and interest, capital, investment, wealth, etc., which are widely used variables in the case of macroeconomics. And these variables classified as two types. One is flow variable, other one is stock variable. Now we are going to see what are the differences between flow variables and stock variables. This is a very important questions, always used to be asked repeatedly. Differentiate between flows and stocks. 4 sentences, 2 marks question, always ask what are the differences between flow and stock. Here you can see what are the flow variables. Flows are defined over a period of time, I told you. Income earned over a year, income per month, income per day, output for the year, profit for the year, that's what over a period, then it is called flows. And example, hours or days or weeks, even income per day, income per hour, how much, the IT professional, they will earn income per hour, and months or years. Therefore, it is very important when you define flows, you have to say flows are variables which are defined over a period of time. The word statement is very important, you have to define it. And then the amount of water is flowing into the tank from a tap per minute is flow. The water flowing into the tank from a tap per minute, because here the time period is minute, we are calculating, is a flow concept. And other flow concepts of flow variables are national income, capital formation, imports, exports, expenditure, interest, change of inventory. Inventory is not a flow variable. Change of inventory is a flow variable. That is very important. Rent and profit, rent per month, rent per day. When we go for our hotels, rent per day we pay, rent per month we pay. Profit earned, all are flow concepts because they are defined over a period of time. These are flows you should able to write properly. And when any questions being asked, differentiate between flow and stock, you have to put a table, 2 columns, and you have to write concern points under flow and other concern points under stock. Always differentiate mean please write the answers in the tabular form. And the stock now, what is stock? Here very major differences. Flows are over a period of time, but stocks are defined particular point of time. That is very important. The cash in hand as on 31st of December in my bank account. The time 31st December at December 2020, how much? At a particular point of time, a particular day at 10 o'clock, this much of amount in my bank account. That is called particular point of time. That is called stock, not over a period of time. Because in the initial period I might have 10 lakhs, but at the end of the 31st I might have only 1 lakh. Therefore, not over the period. At point of time of this day, at this time, what is the amount is kept? Point of time, that is mean point of time. And Now, capital goods or consumer durables, you can see we have studied, they both have a common character. Consumer durables like machineries, computers, TV sets, and like capital goods, cars, buildings, they will not ultimately consumed in a day or a specific period of time. We can't say this building we will use for 15 years. We can't say maybe we can use for another 20 years more also. There is no specific period of time. These variables, durables and capital goods are not get worn out or wear out, or also get consumed at a particular time period. We can't say this car will be utilized only for 6 years. We can't say definitely anything. Only we can calculate what a particular point of time we can say how much the value of the car at that particular point of time, not over a period of time. Therefore, these come under concepts of stock concepts. For example, the building of machines in the factory are there irrespective of the specific time period. We can say our school building or college university building only for 15 years. We can't say. It will be over a period of time. We cannot definite. Therefore, it is come under stock, because only at the point of time we can value the building. And these are called stocks, the capital goods and consumer durables come under stocks. And stocks, example, water in the tank at a particular point of time. How much water is there 30th of December at 10 o'clock in our coastal tank? That is called particular point of time is a stock. Foreign currency reserves of India as on 30th of December at 10 o'clock, how much? How many US dollars are with the Reserve Bank of India as foreign currency reserves in the form of US dollar? It is stock. Food grain stock in the granary, how much stock is there in our godown or somewhere at a particular point of time, 10 o'clock, 30th of December, how much is stock? Because after 11 o'clock it may vary. Therefore, total borrowings from IMF or World Bank for India. Wealth mean everything, house, money, bank accounts, vehicles, everything is together, gold, together at a point of time, how much worth of wealth I have at the 30th of December at 10 o'clock. Because after 11 o'clock I may give some money to charity. Therefore, my wealth will decline at a particular point of time, how much? And population of India at a particular point of time. And these are the questions. All these answers for these questions are described and explained very well in this video. Please kindly watch the video 2 times and keep it in your memory and answer this question. Thank you very much for your patient listening. Sai Ram to you all.